As part of its agenda to promote financial inclusion in Nigeria, the Enhancing Financial Innovation Access Group, Efina, hosted a media forum in Lagos. It brought together journalists, bankers, fintechs, financial service providers, and regulators. Susan Adeoye, Grants Manager, and Mariat Umar, Program Specialist for Efina, gave the current state of financial inclusion in Nigeria and an overview of financial awareness and literacy in the country.
We need to ensure that all of us are collectively willing to work the extra mile to ensure that our fellow countrymen get easy access to financial system and are able to leverage this access to improve their economic and social well-being. So I would say this, that we all remember that the rich would not be able to sleep peacefully if the economic and social divide is allowed to grow any bigger. We need to be brand ambassadors of financial inclusion. We need to be able to tell people that, look, if you open a Flutterwave account, a piggy bank savings account, that's a digital footprint for you. And if you want to lend money tomorrow, someone will be able to track you. Someone will have a little bit of information to, make a financial decision to give you access to loan services without necessarily collecting all the collaterals that you're scared that they might be asking for. So today's event we're hoping that it would be a glowing testimony and it would drive the initiative to spread our message, that is Efina's message on financial inclusion, far and wide. And I firmly believe that the support of the media will definitely be a catalyst and further invigorate the efforts being made by the government and non-governmental agencies. So as we leave here, I hope that we all plan to, especially the media guys, plan to open a section on our newspapers and dedicate it to financial inclusion, increase access to financial services for the less privileged. I also hope that when people reach out, mostly the banks, the fintechs, the development agencies, when they reach out to give the reporters, the journalists, the editors content on financial inclusion, it might not necessarily be a headliner, but we would like you to at least review the story, review the reports before saying, oh, sorry, it's not newsworthy. Iyala Sarah, who sells rice, if she ever has to look at the newspaper, she's always going to look at the front page. She might not get to the 38th page where you always hide the content, which is for her. So we are hoping that after this event, there would be a review and the approach would change, and stories regarding people like Iyala Sarah. I mean, if you look at the story of Ebano, I don't have in-depth knowledge on it, but the little that I know of Ebano was that he actually started from a mini store. He did not start as the Prince Ebano that we all know today. If that man did not have access to financial services, he might not be where he is today. So the Iyala Sarah beside you or in front of your office might be the next Ebano. She just needs access to financial services.
So for us, based on our A12 2016 data, the current state of financial inclusion now, we have that 36.9 million adults are currently banked, and we have 40.1 million are financially excluded. For 2016, the rate of exclusion was extremely high, and we know that financial exclusion stifles economic growth. So Efina is appealing to the media as well, and every other stakeholder present here, that we have to work together to try and reduce that exclusion rate. Financial inclusion is very important because it helps families to have access to finance, to have a stable path of consumption, to help with education, health, to increase their investments, and also help them to insure against unfavorable events that can occur in their lives. Some of the barriers to financial inclusion from our survey include, the first one is irregular income. Then the lack of employment, we know that that is very high in our country at the moment. People don't have jobs, so they are unable to have source of incomes and are unable to save. Then the low literacy levels. This is observed especially in northern Nigeria. They are less literate there, and because of that low literacy level, they are unable to use financial services. The long distance to financial access points. Nobody wants to go to a bank branch that is maybe 10 kilometers away from their houses. That's why Efina tries to encourage agency banking so that the agents can take these services and products to the doorsteps of our customers and clients. Then we talk about regulatory barriers, such as the cumbersome KYC requirements, lack of trust in financial services providers. In the past, we've had issues of customers complaining that you do not trust the banks, the MFBs, because they don't know if they'll still be there for them tomorrow. Then affordability. Some of our products and services are way too expensive for our target audience. So we have to put them in mind when we are developing these products and services and make it affordable for them to be able to use. Some of the recent trends that we've noticed drive financial inclusion: smartphone penetration. This is highly important because right now with your smartphone, you can do anything, any transaction, even from the comfort of your homes, your bedrooms. Then we have the digital financial services and fintech solutions. The use of digital platforms has made life very easy for everyone right now. You don't necessarily have to go and queue up in the bank branches anymore like we used to before. Then the turnaround times for processing transactions. Because of DFS and fintech solutions, the turnaround times are now very, very reduced. You don't have to queue up for so long to get access to financial services like we used to. Some of the available products and services targeted at low-income earners to promote FI in Nigeria. We have savings products. We noticed over time that our target audience, which are the low-income population, like to save for a rainy day. No matter how small, they don't mind even saving up to 100 naira a day. But the attraction for them to pick up some savings product is if you have a micro-lending element attached to it. From some of our grant projects, we found out that this is a very key attraction for some of our customers and clients. They'll rather save many times once they know that they'll be able to have access to some micro loans to help better their businesses. Then we have microinsurance. Under this category, we have health insurance, which is extremely important. Some of them don't have the funds to be able to afford healthcare, basic healthcare. We have life insurance, and most especially, we have agricultural insurance, because in northern Nigeria, we know that agriculture is a major focus there. So most of them go as far as insuring their crops against pests, flood, droughts, and a host of other things that may happen. We have the micro pensions, the remittances via your mobile money channels, sending money to your loved ones. Then, of course, affordable housing is key. Everyone needs a roof over their heads. So at Efina, we see promoting financial inclusion as a collective responsibility. Efina is positioned as an objective, honest broker. We do not take sides with anyone, with the regulators, with the market operators. We just ensure that we work together with all our stakeholders to ensure that financial inclusion is advanced. So for Efina, we'll continue to provide credible information on the financial sector. We'll continue to work closely with the policymakers to come up with policy initiatives for an enabling environment. We'll continue to provide grant subsidies for financial services providers to develop products and services that will provide access to the low-income population. For the government plays a role in creating an enabling environment for financial inclusion to thrive. We also want the government to also ensure consumer protection with policies that improve financial transparency with financial markets. For the private sector is encouraged to continue to harness technology and adapting this technology to consumer needs, because the use of technology is the way to go now. For the mass media, which is why we're here, we encourage and urge the media to promote financial literacy, which remains very key to advancing financial inclusion. We would like the media to work together with us to disseminate relevant information on financial inclusion and highlight its importance to economic growth.
The forum featured a panel session that discussed accelerating financial inclusion in Nigeria, the role of media. Chairman Efina Board, Mr. Segun Akerele, Senior Partner Nairametrics, Ugochukwu Obichukwu, and CEO Bestman Games, Mrs. Nimi Akingube, speak further on the forum.
The essence of the forum is to try and find out how we can engage with the media and other strategic partners to drive the message of financial inclusion. We are aware that financial inclusion is very important to Nigeria today. We have 41 million people that are excluded. We have a target of 20% exclusion by 2020. So it is important that we get all the stakeholders involved in driving this message.
Well, I think the role of the media is critical, because you have such a huge audience, whether it's radio, television, newsprint. columns. There's just so much. And then, of course, social media and the internet. We've just got to use that messaging to impact lives. The financial literacy, financial knowledge has got to be simplified, clarified. Right now, I find that many times it's too complicated. We can break it down into bite-sized pieces so people can actually understand it. People do want to transform their financial lives. When they read some of the complex ways that we write, it makes it very difficult. I think we have to all come together and try to break it down and make it like a way of life so people can use these tools and change their lives. A major passion for me is the next generation. I feel that we need to put something in the school curriculum. So I was very excited to hear that something is already in the works, even if it's SS level. Before children leave school, they should have at least the basic tenets of personal financial knowledge. Because what happened to all of us? We left school, left university, you didn't know the first thing about saving and investing. It's such a fundamental aspect of our lives. So we should try to teach children this before we leave school. That's what we are trying to do. So we're going into the schools as an extracurricular activity for now, but it would be great if it was part of the curriculum.
Now, in terms of what the media can do, they also need to invest a lot in the media. What I mean is the media, as it is today, are probably more equipped with reporting maybe political related stories, maybe entertainment stories, but reporting financial stories is a bit more difficult. It requires a bit more skill. You have to be deft. The language that I use have to be less wonkish. So that requires a lot of investment, and you have to invest in capacity building. So it's important that Efina said that we're going to be supporting capacity building. It's important that they do that as well. It's important that they also support some of the few financial media companies that we have around, so that they can continue to expand and continue to tell a lot more stories that at least drive people a lot more into the financial bracket that we want. And like I've always said, stories around finance and money are probably one of the most interesting stories ever told in the world. So people think it's boring, but it's not. It all just depends on how you tell those stories. So I think that they need support, and I think that organizations like Efina need to support financial media companies all over the country so that they can continue to tell the story of financial inclusion.
So what's the role of fintech in this regard? We've heard about fintech as an opportunity to reach out to particularly the rural population, the unbanked population. What's the role of fintech in this regard? How are you engaging in that regard?
So fintechs are essentially financial technology companies, right? So where they come in is that banking is expensive. When you have to go to open a branch, from what I can understand, you're looking at about the cost of about maybe 7, 8, 9 million naira to open a bank branch. A fintech will do it for nothing because it's all digital. So for the main important difference is that with fintechs, it's a lot cheaper, it's a lot quicker, it's a lot faster, and also obviously there's opportunity to create jobs as well.
With 41% of Nigeria's adult population financially excluded, the media have a critical role to play in ensuring financial education and awareness is spread across the country, particularly the rural population.